Hi there everyone, good morning and thanks for starting your day with us. This is The Market. I'm Avanne Dubash. With me is Ajaya Sharma and Anisha Jain. And yes, the festivities are in the air. A truncated week it was, largely owing to Christmas, and we saw the festivities all across the country with the sparkles, the lights, and I hope you guys had a very Merry Christmas.
Oh, it was outstanding. Went for a family brunch, but Anisha doesn't seem to be shedding the Christmas cheer.
Yeah, I think I'm just going to continue it till the year end. Yes, the festivities are still on, right? Still holiday mode, still New Year move.
Yeah,
and we are seeing a Santa Claus rally of sorts as well.
Yeah, in fact, not only in India but globally too. Friday was a good session, no?
Yeah, absolutely it was, and thankfully there wasn't red on the screen on Friday's trading day, but nonetheless it wasn't the best of weeks. You did have the markets. Well, we wrapped up a 0.5% higher for the frontline indices. That's Friday's trading session at 21,349 levels. The broader markets actually stole the show, and it's interesting that of the Nifty constituents, you had close to 31 out of 50 that actually managed to decline. FIIs, 5 straight days, and they continue to remain net sellers. And for the week gone by, Ajay, we snapped that 7-week gaining streak.
But I would say, I will take it a little differently. Avanne saying that we have captured most of the gains so far. We may not be at 21,500, which is the recent peak, but at least 21,200, 300, that zone is there. And also Friday's session was very interesting in the sense that if you saw, Nifty was gaining almost 100 points. But Bank Nifty was under pressure. So the banking stocks were dragging the markets lower, but it was IT within the Nifty which was actually leading. So look at that. Bank Nifty actually came back 350 points almost at day's low. But IT was doing all the heavy lifting. We'll talk about a lot of stocks in the IT pack. Wipro, HCL Tech, all of them are gaining very smartly, not only in India but overseas in the ADR, GDR market as well. So there's a lot of news flow around IT, which was doing heavy lifting. Auto stocks were gaining very smartly. And of course, there was a bunch of stocks in the broader market which were doing well. So it was not a boring market at all. But yes, for compulsive index traders, probably getting into a bit of a range today. This week, of course, will be expiry of the December series as well. So watch out for the rollovers amidst low volumes, because institutional guys are enjoying their Christmas break. It's just the DCs which are doing all the heavy lifting. In fact, if you did see the cash market buying figure, you saw that FIIs are seen booking profit, but DIs were pulling all the money into the market. So it was a net okay.
Yeah, and I think that's going to be the trend with the year end coming in as well, that the FIIs will continue to sell. But the good news is as well, the market, lost its 7-week gaining streak, but it was totally on account of the, sharp downtick that we saw on Wednesday. Since then, we've recovered quite a bit. In fact, Nifty has recovered more than half of the lost ground on Wednesday. Mid cap has recovered 63% already, and small cap has recovered 70% of the losses that it made in one-day crash on Wednesday. So at least that way, the momentum is on the upside. And separately, of course, it's going to be the busy week because it's final week of 2023, and the FIIs would probably be on the holiday, but the monthly options expiry is something to watch out for. But taking the cues from what's happening across the globe as well, if you look at the US indices, they managed to log 8 straight winning week. In fact, S&P is now less than 1% away from its record high level. What also supported the sentiment there was the PCE data, or the inflation data, which is very closely tracked by Fed. The November data was out and it was pretty much in line with expectation. There was a gain of 0.1% on month-on-month basis, and the overall reading came in at around 3.2%, and that was bang in target with what the street was expecting as well. Even if you look at the other global cues, dollar indices is sitting at a dollar index rather sitting at a 5-month low. The inflation has cooled off. Oil prices remain range bound as well. So that entire tension which was there with respect to Red Sea activity, etc., is ebbing and getting factored now. So overall, not major cues as such from Wall Street as well, but a lot of action in the primary markets, Ajay. Of course, we're talking about how the secondary market is going to be a bit more weakish, but in the primary market, a lot of listings today, and then Ola Electric DRHP.
Well, yeah, let's break it down. There are a lot of listings and many good ones actually happening, because the grey market premium seem to be suggesting that activity is very high there. There are very healthy premiums in many of them. Whether justified or not, it's early to say, but there is a lot of activity in the primary market. Motison Jewellers, Suraj Estates, a Bombay-based real estate company. Muthoot Microfinance, of course, we all know about. So it will be interesting to see how the street actually treats them at the first half an hour, 15 minutes of trade. But Ola Electric was a big one. I mean, we did break the story on Friday that it's coming in within a few hours, and it was filed on Saturday actually. And it will be interesting to see how some of the EV related stocks, we've already seen Bajaj, Hero, TVS actually rallying from 1200 odd to almost 2000 odd in the run up to this Ola Electric IPO, because it will be the first IPO from the EV pact on the main bourses. There are some smaller fringe players in the small cap universe. They have been active all around, but commentary from Ola Electric on profitability, how much R&D spend, the volume, all of that is something the street would watch out for very closely. So that's Ola Electric for you. We'll have a very detailed analysis on that as well, because it will capture a lot of eyeballs. First auto IPO in 20 years. You remember Maruti IPO?
No, I do not.
I remember.
Actually,
Maruti
I
IPO.
think a lot
You'll
of
be
those auto
surprised.
analysts would have not analyzed the DRHP in the longest time. I
Yes,
feel.
auto RHP.
I mean the auto, I mean obviously the ancillaries etc. have come a lot, but
Yes.
the auto coming in the first from the EV market.
You know, Maruti IPO, I remember, there was absolutely...
Which year was it?
No, it was 20 years back. I remember I was in college in my MBA, and we remember it was not like, oh my God, Maruti IPO is coming. It barely got any, premium or all that. Everybody knew it's one of the major companies, the major company then, and maybe the cult of equity investing wasn't there.
Wasn't
I
there.
think
So
it's
it
more
was not
that.
discussed in households that Maruti IPO. Today, bulk of the new Janta knows Ola Electric has come out with an IPO. So probably that is the reason. But don't. I mean, Ola Electric, all the excitement around it is justified. But don't just dismiss a lot of legacy companies and their EV plays as well.
Yeah, absolutely. First pure play EV maker, as you said, that will be entering the public market. So maybe that is the USP when it comes to Ola, and it's a 5,500 crore rupees fresh issue, an offer for sale of about 1750 crore rupees. So 7,250 crores all in all for Ola, with the founder Bhavish Agarwal selling about 47.3 million shares. The existing shareholders will sell close to 95 million shares in the OFS. And yes, as you said, important D-Street debuts today, Ajay. So just to put it into perspective, there's Suraj Estates. We interacted with the management, redevelopment, that space, Moti Sons Jewelers and Muthoot Microfinance. So
Yeah, jewelry stocks lately after Senco Gold, everything has been, people have been very excited on the jewelry stocks, and the Moti Sons is there. RBZ will also list, I think, next month. Microfin, the space itself is doing very well. And of course, don't rule out the pedigree, the main company actually holds.
But
and the subscription.
Moti Sons in terms of the subscription, pretty
yeah,
phenomenal, 159 times.
Yeah, so that's what people are not getting, their allocation in the main. That's why they are piling up on the grey market side a lot. But much of this could also be froth, huh?
Yeah, it is a bit frothy, but let's see. I mean, the excitement is there and irrationality can stay in the markets for long, we know.
Yes.
So let's see till when the party continues. But talking about the party, we also have a full house today. We have Naresh Mirani joining us and Kunal Bothra as well. But Naresh, first let me come to you. First up, best wishes for Christmas. But what do you think about the last week of 2023? How is it going to pan out? Are we going to make a fresh record high and touch 21,600? Or now let's sit in that range of 21,300, 400 thereabouts. Naresh, the question is for you. Okay, I think we have a bit of an audio issue with Naresh at this point of time, but Kunal is with us in the studio. There couldn't be any audio issue here. So first up, Merry Christmas. How was the Christmas with kids and everyone at home?
Yeah, Merry Christmas to all of you as well as to all the viewers of ET Now. It was great. It was a good vacation, long weekend. Finally managed
perfect.
to utilize one of the long weekends in the entire year.
Did you go out?
Yes.
Where?
Yeah, some place in Gujarat.
Okay, so you drove down, is it?
Yes.
But there were some very scary images and videos coming in of the highways which are jammed. So
But that was Shimla and Manali.
No,
those
here also,
serpentine-
Mumbai-Pune highway as well.
Mumbai-Pune as well.
Yeah.
Luckily, I was not stuck in
Okay,
that.
good. Maybe your timing was right.
Seems like that the Nifty and Bank Nifty is stuck, right? Bank Nifty,
Yeah.
what it has made, 7 or 8 attempts for that 48,000 mark?
Correct.
A very, very strong hurdle, isn't it?
Yeah, it's a strong hurdle, and I think it's a good time for the indices to spend some time over here, consolidate. So after 2,500 plus points rally for the Nifty and more than I think 4,000 points for the Bank Nifty. it is but obvious that at some point in terms of the trajectory or the trend, the indices are bound to take a pause. So I think it's a good sign that the indices are finally taking a pause. There was a bit of a shakeout, on that single day when the index had fallen down by 400, 500 points, the Nifty on intraday basis. But I think we've managed to recover quite well. The stocks have managed to recover quite well, and that generally is a sign that the trend is intact. It's just that there's a bit of volatility which has come back into the indices, and that also indicates that we could probably settle into a trading range for the next 1 or 2 weeks. So wouldn't be surprised that for the entire remainder part of this week, we could probably be stuck into a range where 21,500 could act as a hurdle or a resistance.
All right, let's find out what Naresh makes of the market as well. And Naresh, a lot of heavy lifting being done by the IT index. Banks took a back seat and it was a phase of consolidation. Is that only going to continue into this festive week?
So I would expect some bit of a consolidation to continue, wherein we've created a short-term base as well as a short-term top, wherein say 21,600 is a top, 21,000 roughly on the downside is a bottom, and we get into this 400, 600 pointer range, wherein we keep seeing stock-specific rotation. So someday it could be IT, someday it could be FMCG, and someday it could be banking. But overall, once we cross about 21,600, that's the time when we get into momentum, or when we get below 21,000 on a sustainable basis. So for now, we are getting in our consolidation, more stock-specific action. Index could take a pause in this gap, and then maybe in the start of January, we start seeing much stronger trends.
Okay, let's take the stock-specific recommendations from our chartists as well. Naresh, what are you spotting on the charts of individual names?
So going a little defensive in names of large caps. First is a buy in Hindustan Unilever, which has done nothing for a long period of time. It has made quite a few attempts to break out above the 2,600 mark. At the same time, it has made a very strong base around 2,400, 2,450. The stock was one of the first ones to actually make a move back in March 20, and since then it has gone nowhere. So expecting this to give a short-term breakout, stop loss at 25.30, target price of 27.50. Second is a buy on Maruti, which has given a multi-year breakout above the 10,000 mark. Quite a few attempts done, then a retest also done, and now making a recovery. In this case, I would expect at least a minimum target price of 11,000, 11,500, stop loss at 9,800.
Okay, there you have it, all the top recommendations that Naresh is flagging off. Kunal, what about you? What makes it to your list?
I'll go with 2 buy calls, focusing on mid-cap names. So Voltas is something which I would recommend as a buy. I think it's an excellent chart. The stock has formed a classical inverted head and shoulder pattern, a triple bottom at Voltas for 750, 800 levels, as well as a breakout which has been confirmed previous week after the 4-5% up move for the stock price. So would suggest a buy, expecting a strong uptick for Voltas for the near term. 1,000 could be an immediate target. Stop loss at 920. And Manappuram Finance is the other stock. The stock had fallen down 10% in the last few days, from 176 to I think 158, but it's recovered back towards 176 mark. So excellent chart for the stock, a V-shaped recovery, and expecting a further up move. Targets of 186, stop loss at 171.
Okay, Manappuram and Voltas, these are the stocks that you need to watch out for and what Kunal is recommending. But we also have stocks which will be reacting to news flow. So Somit is joining us to help us make sense of the news flow on UPL, Infosys as well as Wipro. Somit, hi. First, let's begin with UPL, the rights issue, and a bit perplexing for the market.
Well, why this stock is important, because on a YTD basis, if you see, the Nifty is up around 80%, but UPL is down around 90%. Now, there are multiple reasons behind this. The debt is high, the revenue growth has been declining for recent quarters. They have been continuously cutting their guidance for revenue and EBITDA that they had given earlier. Now, the start of FY24, they had expected their FY24 revenue growth to be around 6 to 10 odd percent, while EBITDA growth was expected to be around 8 to 12%. While in the Q2 call, they have downgraded it now to a flat revenue growth for FY24 and around 0 to 5% decline when it comes to the EBITDA growth. Along with this, analysts have also been trimming their future prospects for the company, and hence we are seeing such kind of a decline. But here, company is now going ahead and doing a rights issue. Now, because it's a rights issue, there won't be any dilution in shareholding most likely. Now, given the fact that promoter holding in the company is low, promoter contribution for this rights issue could be around 1,360 crore rupees, while that of public would be around 2,840 odd crore rupees. But most likely, like other promoters have also done in the past, they would subscribe for the rights issue, which if there is a shortfall coming in from the public side also. So that could also give a promoter a chance to increase their shareholding in the company. Now they would most likely use this rights issue to reduce their debt, because that's what the company had indicated in the second quarter call. They had said that they will like to reduce that debt by around $500 million by the end of this financial year. And if rights issues actually, if the proceeds of the rights issues is actually used for debt reduction, then their total debt would come down by around 12% and the 870 odd crore rupees of finance costs that they have been paying on a quarterly basis would also come down significantly. Because if you see, in the past 2 quarters the company has been reporting losses, and that is most likely because of the pressure coming in from the finance cost. In Q1 it was around 700 odd crore rupees, in second quarter it was 870 odd crore rupees. So a reduction in debt, a reduction in finance cost would definitely boost the profitability of the company and would also show the promoter commitment towards the growth prospects of UPL going forward.
Okay, that's interesting. And 4,200 crore rupee rights issue on UPL. But let's also put the spotlight then on the IT majors, Infi as well as Wipro. Infosys, first up, a massive contract, $1.5 billion being cancelled. What's the impact of that? And let's also talk a little bit about Wipro, because you have some clarifications regarding the management region.
Well, Infosys and Wipro, both the stocks were seeing some positive momentum in the month of December. In the entire month so far, if you see, Wipro is up around 12%. Half of that move came in on Friday, while Infosys also is up around 8%. And will this be a dampener? Anisha would be actually better to tell us about this. But it was a non-binding agreement, right, for Infosys?
It was an MOU. It wasn't part of the TCV, and it was a project which was to be there for 15 years. So it isn't that, $1.5 billion goes away from FY 24-25 itself. But having said that, there is no, clarification given as to the reason of the cancellation. Plus, there is this worry and concern that is this first of many? Could this be the case from a lot of IT companies? Because on one hand, there is a big dichotomy in the sense of how December the stocks have moved and what commentary we have been getting. We spoke recently with the management of Zensar, Sonata Software. We spoke with managements of other IT companies as well. And all of them are saying that demand conditions haven't improved. In fact, even Tata Tech for that matter, everybody said that as we're getting into 2024, we are a bit more caution about how the macro setup is. Yes, it's slightly better, but it's not that, everything is now hunky-dory and the worst is behind. They're calling a lot of caution and concern right now. So is this the case that this could be first of many? So that's why emphasis will be in focus. And of course, the guidance and the slew of exits is something which has been a bit overhang for emphasis. Wipro is the other interesting one. Of course, it was one of the most undervalued stocks per se. And the reason is also because of the underperformance in terms of what the company delivers in terms of revenue as well as margin. That's one of the lowest if you talk about the big 5. And that's the reason Wipro is undervalued. On Friday, we had seen there was a big 7% surge that had come in the last 1 hour. And the street was speculating that perhaps L&T Infotech's ex-MD and CEO, who was Mr. Sanjay Jalona, very well regarded name in the industry, is going to come at Wipro. Now we've got a categorical, clarification and denial. They're saying unequivocally denying such rumors. So it's not a no comment or it's not something that we don't talk about, sort of. There's a clear denial coming in. But let's see how the stock reacts today. Will there be a complete reversal or will there be some hope? Let's see.
But this Mr. Jalona's joining has come in before as well, right?
Yes.
With
That was
other
Tech
companies.
Mahindra
That was
earlier.
Tech Mahindra, exactly. You remember how Tech Mahindra actually, reacted at that time. But coming on this UPL point, Soumit, this is a very good opportunity for the management to raise their exposure at the bottom of the cycle into the company shareholding. One can assume because it's bottom of the cycle, guidance has been cut recently and there is no visibility on turnaround. Other large shareholders actually may not participate in such wholehearted manner. So that portion also could be going towards promoters. And usually we've seen, because promoters have a 5-10 year vision of the company, not 5-year quarter vision, these guys land up raising equity in their companies for cheap. So watch out for people who are actually participating in their rights out of the large ones. I was speaking to one of them.
Had they participated in the buyback, the promoters, when it had happened earlier?
Yeah, last year. It happened last year.
But they had participated in the buyback.
I'm
by
not sure of
tendering?
that. I'm not sure of
Let's
that.
just check that as well, because that will tell you what their
Strategy
point of view was.
exactly.
Yeah.
But right now, look at the recent low of UPL was 530, 532 actually. it was a multi-year low. It became the cheapest stock out of the large cap universe at 9 time forward.
Yeah, he was talking about the move. You want to weigh in on this in terms of just UPL's price movement? Kunal?
This is the only stock which has been from the Nifty 50 which is below the 200 DMA since I think the last 7-8 months. So there was a point where almost 49 stocks out of Nifty 50 they were trading above their 200 moving average.
This one
only
alone,
UPL has
for
come up.
reasons obviously.
Yes.
But it will be interesting to see what the promoters have to say, management, whenever they choose to talk. They've gone silent in the last 2 quarters. But whenever they do choose to talk, what was the thinking behind and raising the, of course, their shareholding via this rights issue?
Okay, Soumya, thanks for popping by and giving us a sense as to which are the stocks to watch for. Tell you what, we'll slip into a very short break. Lots more stock ideas as well as stock-specific news coming right up.
All right, Sanjeev Hasin is also joining us this morning to talk more about markets. Sanjeev, Merry Christmas to you. I heard that, Delhi highways going out into all these hill stations were badly jammed. Delhi was having a great time Christmas. In fact, Mr. Modi also hosted a massive Christmas party. How was the Delhi, scene as far as Christmas is concerned?
Yeah, good morning, Ajay. Merry Christmas to you, your viewers, your whole team. And who could have asked for a better and a brighter Christmas? You've had Nifty celebrate Christmas, New Year, everything in advance. So yes, the atmosphere is very good. In Delhi, you've had a slew of weddings. I mean, I've attended 4 weddings in the last 3 days, and the festive cheer is really there. So, like you rightly pointed out, I used to keep telling people that pan India, the rotation of traffic is so high that people want to go get away from cities into smaller places, hill stations. That's why your IRB Infra will be laughing his way because he has 24,000 kilometers of roads, and you've seen NHAI and FASTag become a compulsory, compulsion. So yes, it's a very, very bonhomie time. Hotels, transport, entertainment are having their best time, and nobody is complaining because the stock market is also at an all-time high. And the global cheer is there. You never expected that the Fed will pivot so fast. Now there are talks of 3 rate cuts. So enjoy the bonhomie as it goes. We head into a new year on a very, very optimistic note, Ajay.
Okay, and hope Santa is going to give you a super gift, Sanjeev, this festive season. So why don't you play Santa Claus for our viewers and for our investors out there and recommend some amazing gifts?
Well, Avanne, we are always recommending something or the other for you to make money. The idea is stay invested. I'll just give you a small anecdote. People talk of trading, buying and selling. For the common investor, the best way is go through a SIP, do a mutual fund, do a PMS, do a, whichever category, but please stay invested. There will be a rotation of stocks. The problem is when you do a trading pick and you do get that 20-30% pop, you try to sell out and sit out cash, you do not rotate. And then when the markets go higher, you get into XYZ. So the feeling of missed out is because of that. And particularly on the FI side, who withdrew money on the back of higher bond yield and so on. So my humble suggestion is stay invested. The volatility will be there. You are at new highs, and you saw that last week also play out. So my top 2 picks, which I will give you for this week and for the 2024, first would be, or rather 3 picks. First would be Ashok Leyland. See, I'm very bullish on Ashok Leyland, given that it is eating into market share on the CV side from Tata Motors. It is the 3rd largest bus maker in the world, 53% market share. And as you see Indigo and GMR prosper, all the blue buses are Ashok Leyland. Thirdly, their internal combustion, communication source of IC, those is doing extremely well. They are also in the EV space quite rapidly. Ashok Leyland at 170 has a very good risk reward for a target of 230 to 250. Second would be go with the largest bank, that is ICICI Bank. Unquestionably, it has all the verticals within it. The NIMs are the highest. The liability side is doing extremely well. And I would say that ICICI from here is poised to be a large cap which will dominate, which has underperformed maybe in the last 6 months, but which can outperform. 1250 is my target on ICICI. And last but not least, a small bank called DCB Bank. DCB is promoted by the Aga Khan Foundation. It trades at 0.9 time price to book at a time when PSU banks are now trading at 2.5 times. DCB also is the largest player in two-wheeler, in agri, and in gold loans. The promoters have just issued a preferential allotment at 137 at a premium, the highest rate which is there of about 80 crore, and they are infusing capital. I think DCB is a no-brainer here, given that the way it is transcending and it's now expanded its branches for which the cost overrun was there. I think NIMs and net interest margins and net interest income will be very sharp. DCB Bank, according to me, is a star for 2024. I would be surprised if 200 and beyond come on this stock.
Sanjeev, the other thing which has happened over the weekend is that first auto company, first EV company has finally filed RHP. I'd like your opinion on it as well, but Shrishti is here with the details of the RHP, and then we'll come to you. How do you analyze it, the impact it will have on the auto space as well? Shrishti, tell us.
Well, yes, Ola Electric IPO is finally through. The company has gone ahead and filed the DRHP with SEBI, wherein this IPO is going to be a mix of an OFS as well as a fresh issue. Do remember that this is going to be the first IPO from an auto major to come out in the last 20 years, and this is the first IPO being the pure play EV company to hit the markets. Talking about this IPO, it's going to be a 5,500 crores of fresh issue. Other than that, the promoters and investors are also looking to offload some of their stake, and this could be as much as 9.5 crore shares. When promoter Bhavesh Agrawal will be looking to offload 4.7 crore shares, and SPF2 Ostrich is looking to offload 2.4 crore shares. Now, about the fresh issue of 5,500 crores, where the company will utilize their money. So, as we know that the company has a self-manufacturing plant that is upcoming, they're going to be utilizing 1,226 crores out of the 5,500 crores for the expansion of this plant. Another 800 crores is what they plan to utilize for the repayment of debt of some of their subsidiaries. 1,600 crores is what the company intends to invest into R&D, and 350 crores they will be setting aside for the organic growth initiatives. Now, talking about the financials, as we know that Ola Electric is one of the leaders in the two-wheeler EV segment, but when it comes to the top line, indeed there is a growth, but the bottom line is under pressure as the company reported 1,472 crores of loss in FY23, and this number is 267 crores in Q1 FY24. But the gross margin has seen an improvement from negative 5.4% in FY22. This number has seen an improvement to 13.73%. Other than that, if we compare with rest of the peers, since the bottom line is in the red, so the EPS is actually negative. But all eyes on Ola Electric. These are the details of the DRHP filed at SEBI.
Srishti, Sanjeev, how do you analyze this IPO? Do you think it is meant for retail, or it's the institutional money, much more longer term kind of money, especially in light of some of the consumer tech companies? They also position themselves as the consumer tech companies only.
Yeah, so Ajay, see, firstly, like Srishti pointed out, it's the first IPO by an auto company after 20 years. I think from where I recollect, Maruti was there in 2003, and now you've had this, Ola Electric. Plus, they've not brought out their ICE vehicle; they're bringing out the electric, which has a huge potential. Thirdly, there is a two-horse race, Ola and Uber, and both have promoters in the shape of private equity SoftBank, which will be some sort of dilution for them. We have to look at the next 5 years, Ajay, because I think EVs are inevitable. And, I was just doing a case study and meeting someone. They told me that by 2025, actually EVs may come down to the price of an ICE vehicle, which is where you will see this sudden run for getting EVs. We are in the process of setting up charging stations, the infrastructure, but I think this is a very good long-term play. And given coming from a house which is now more of an international play, I would definitely recommend this with a 2-3 year window to create wealth.
Okay, so that's the verdict on IPO of Ola, which is on the anvil now. Very soon, we'll be seeing that. Of course, we'll have to wait by to see what the valuations, etc., are. But thematically speaking, it is likely to generate wealth over the next 2 to 3 years. That's the view coming in from Mr. Sanjeev Bhasin. But Mr. Bhasin, what about J. Kumar Infrastructure? Do you track this one closely? CLSA has written a note today, and they've almost doubled the target price to above 700 rupees.
Well, you are aware that the best is now in coming in, and now there will be recommendations across the board where there are vested interests and so on. We have been bullish on this space in the shape of NBCC and NCC. I don't track J. Kumar Infra, but I know that they are very much into infrastructure development. This stock was one of our recommendation close to 150. Now at 500 to say it will jump, that is actually bull market talk. We are invested in NBCC and NCC, which have a far greater vision, far better order and execution book. So as a disclosure, those two are in our portfolios. Jay Kumar could be a relative outperformer given that, government's recoveries and processes of payments have become faster. And in infrastructure, what the problem is getting your dues from the government. I think that is what is seeing a lot of target, and that could be the reason they have recommended it. But Anisha, take it with a pinch of salt. At 21,500, you will only get ideas which are going to double. So you have to be cautious.
Okay, so of course, a lot of those infrastructure names are doing well, and NCC, etc., is something which is on the radar. But Kunal, what's your view on RBL Bank? That stock might be in focus today because of the ED of RBI, which has not been reappointed, which means the tenure has ended, and that it's been taken as a good news by the street that there's no longer a need to have a watchful eye on that one. Anything on the stock price?
Yeah, it's been a decent chart. In fact, from the time when the stock was in the news flow with respect to M&M, I think post that you've seen a completely different texture for RBL Bank. I think the stock was almost at sub 200 levels, 175, 180, 185 approximately. And from there, the stock has gone into an uptrend. We saw the stock consolidating in between. It's a very high beta stock, and apparently the stock from that 175 mark has actually gone into a steady uptrend. There have been mild bits of volatility for RBL Bank. I think the recent one was around this 260 odd mark, 270 odd mark for the stock price, but the recovery is much more stronger and swifter this time around for RBL Bank. So the patterns are quite strong. When you look at this in the entirety over the last 6-8 months, it's been more of a stable chart and not the high beta stock which it erstwhile is. The stock has broken past about the resistances 250, 255 levels also quite convincingly on the weekly, monthly basis. So I think all of that should augur very well for the stock over the medium to long term.
The news, of course, is that RBI's representative on the board is likely to step down. RBI has removed somebody who's watching things very closely. But ever since they've given their presentation on increasing ROAs and ROEs, that was about a month back. From 220 to almost 280, the stock has run up in a single month. So watch out for that one. Remember, we were having a
we were talking about Tata Power and RBL Bank presentation, but I want to talk about the presentation which just got uploaded over the weekend, and that's Anant Raj talking about the data centers growing at 38% CAGR for the next many years.
Yeah, I was quite surprised at that number actually, and this has come in right after there are two transactions which are happening there. The first one, promoters and Gagandeep, which is actually a affiliate of Inam, which is Nimish Bhai, they have put in 25 crore, promoters have put in 50 crore, and now 500 crore QIP is underway. And in the middle of that, they have put out their commentary. But what I see at this commentary, it is more tilted towards the real estate business. There's very little actually, potential. Everybody knows how much data center potential is there, all of that. It lacks the details, but what they're actually essentially saying is that currently the cash flows of the company are coming from the real estate business, the outlook of which is very strong, and they will continue to feed into the capex required towards the data center at least for some time.
Yeah,
but the stock has done very well. I mean, from 80 odd to 300 in almost a year.
Mr. Bhasin, do you track this one, Anant Raj?
Well, this was one of my steals, if I can say, at 18 and a half, 19, when the promoter was buying in the deepest throes of COVID. I picked up this share, and I thought that the market value to discount to the land value in Gurgaon was at the highest ever. So as a disclosure, it's in my portfolio from 18 rupees. And I can tell you one thing, yesterday I met some property broker also who was telling me about DLF's new launches. This is just to be a little bit cautious. DLF in sector 77 near golf course is launching a new project at 18,000 a square foot. So, real estate players are now going through the roof in pricing also. There is a lot of demand, and the double twin effect of wealth, that is high gold prices, stock prices, all are leading to, a peak coming there. So be cautious on some of these real estate names. They've already doubled, tripled, gone up 10 times. I will be very, very happy if it does well. But this is a bit of caution, because if you're going to price it beyond normal, then, if in the next 3 months you see any uneasiness on growth, then there will be definitely a ripple effect both on rates and on property prices. So a bit of caution over here on real estate and construction.
Okay, really lucked out on that one, and a great call. That's Anantraj and the entire real estate basket that has been a buzz of late. But that aside, let's also put the spotlight on Paytm then, and we will be watching out for this one on the back of the news that this is in the Economic Times exclusively, that they have laid off over 1,000 employees as they cited efforts to cut costs. They're looking to realign their overall business. Let's get in my colleague then, Sumita Karir, who joins in with the latest updates. Sumita?
Right, so not such good news really coming out of Paytm, which is undergoing another restructuring exercise, and this is happening across multiple verticals. So you have the wealth vertical, the payments vertical, the insurance vertical as well. In fact, sources tell ET now that these layoffs or this exercise to reduce costs will very well extend into the next 2-3 months as well. This is remember happening amidst an AI boom, which is very, very significant and important to note. Remember, founder and CEO Sharma has spoken about making Paytm an AI first company, and a mention of AI juxtaposed with these job cuts is also something that's mentioned in the statement that we have received. Paytm says, and I quote, "We are transforming our operations with AI-powered automation to drive efficiency, eliminating repetitive tasks and roles to drive efficiency across growth and costs, resulting in a slight reduction in our workforce in operations and marketing. We will be able to save 10 to 15% in employee costs as AI has delivered more than expected. Additionally, we constantly evaluate cases of non-performance throughout the year." So one strong point coming out, that is of AI. And of course, the other strong point is about cases of non-performance throughout the year. In fact, Paytm goes on to say that they will see a manpower increase of 15,000 more in the coming year, which basically means that more hirings will also take place, and it will be focusing on further expansion of payments, of its insurance and wealth platforms, considering the huge pool of young investors that are now warming up to the idea of investing. Now, Paytm also says that the focus, like I said, will be on all of these platforms, plus its distribution-based business model in loan distribution as well to drive scale and, of course, operating profits. This, remember, is happening after Paytm scaled back from small ticket size consumer loans after a regulatory clampdown on unsecured loans by RBI. And of course, it also stated that in an analyst meet that happened about 10 to 15 days back, that the focus will now be on big ticket size personal loans. As far as layoffs are concerned, well, this year, has been about layoffs on of course, pruning and job cuts have been really have made it to headlines almost every other month. They've been pervasive across startups on the back of high interest rates. And this has been a year truly where profitability over growth has reigned supreme.
Oh, well, yes, profitability has been something that all of these new age tech companies have been talking about very, very positively now. But Ms. Vaseem, before I let you go, despite the run-up that we have seen in some of these new age tech companies, which are the ones that still look good to you? Would you take a bet, let's say, on an underperformer like Nykaa, or stay with the strong name like Zomato?
So, Anisha, firstly on Paytm, I think it's a very big positive. They've realized that shareholder value and the bottom line is going to be key. And we've seen that the stock got a hammering from 800 level back to the 600 on the back. That's small ticket and the co-lending business will be under pressure. And they've guided for 2 quarters. But I think this is a very big positive that the management is cutting off the excessive slab. It is improving return on equity. And thirdly, there is no better technology play on QR and this whole fintech than Paytm. As a disclosure, we have started to add Paytm in our portfolio. We already had it. We think Paytm is a no-brainer. They are also getting the contract for DMRC for Delhi Metro. It will be the next place which they are going to grow on volumes. And as they transcend from the small ticket size to the large ticket size, this is going to be a business which is going to be unscalable, which is going to be the maximum of scalability. Thirdly, their cost cutting means they are now behaving like a listed player rather than a private equity where you could add that slab with no disclosure. So thumbs up to the management. They are unleashing a lot of things which are going to be a shareholder wealth improvement and so on. So Paytm, Zomato, and PB FinTech, these continue to be my three top favorites. In fact, I can say that if PB FinTech, that is Paisa Bazaar and Paytm, are no-brainers at this price.
All right, Sanjeev, thank you very much for your time this morning. Devin Choksi is also joining us. Devin, good morning. Thank you so much for your time. Let's start by talking to you about the IT space. You know, there is one section which believes that the stocks are actually running ahead of themselves. The managements are not as positive, but the street is turning way more positive regarding these stocks. At that time, there is an underperformer on the large cap space, which is Wipro, where there are, every now and then some buzz coming in, some top leadership changes, etc. How do you look at Wipro out of the entire IT pack, which has underperformed many of them?
Yes, Ajay. Good morning. Well, I think typically in case of, the Wipro vis-a-vis the entire top-rung IT companies, where the top-rung companies are basically thriving largely on the inorganic way of growth. They have systematically, created their presence in different verticals, including, the verticals which are the AI, the AGI verticals. And as a result of which, they've been winning some of the large size contracts. So I'm not completely surprised that some of the large companies like TCS, Infosys, etc., are basically getting relatively, better amount of order inflow, and the confidence is returning back into the business. Vis-a-vis that, Wipro has moved on with the inorganic growth approach, and they have in last 2 years or so, we have seen significant amount of integration related challenges that they have seen. And at the same time, I think they have also lost significant amount of talent in the process. So Wipro is remaining, a challenging one as far as the outlook is concerned. Though the business condition is improving, though the customers would probably start putting in the large size orders of a long tenure, but at the same time, the company remains slightly more challenging at this point of time, particularly in form of getting the right kind of talent for the job, and at the same time, sustaining this inorganic growth engine that they've built. So I would rather put my money particularly in the mid-tier IT companies where engineering and R&D space remains relatively more clearer to all of us. And as a result of which, we are seeing at least 3 to 5 years of visibility for these companies with a larger growth rate. Vis-a-vis, the frontline companies which are likely to grow, TCS, Infosys kind of companies are likely to grow about 15%. But the fact remains that their mid-tier peers are growing about 25% rate of growth. So we would prefer more amount of actions over that space at this point of time.
Enough. So that's the view coming in on the IT sector. But what's the view of the brokerages right now, and which are the stocks they're bullish on? Let's go across to my colleague Vamakshi with a roundup of major brokerage calls this morning.
Well, yes, let me first start off with India Mart Intermesh. We have a note coming in from Equirus. They've initiated coverage in this counter with a long rating, target price of 3,180 rupees per share. They have highlighted that they see some very strong, solid growth prospects for the company over the long term. In fact, they're expecting to see a revenue CAGR of almost 17% and an EBITDA CAGR of almost 22% from FY23 to 28. Largely, they believe this growth would be aided by sales efficiencies as well as economies of scale. Apart from that, they have also highlighted that investments in commerce enablement could actually provide value creation beyond the core business of the company. So given all of those factors, India Mart Intermesh, we have Equirus initiating coverage with a long rating, and on the back of that, watch out for this counter. But apart from that, another counters, in fact, a couple of counters that we will be focusing on pertain to the oil and gas space. We have a note coming in from MK. They believe that the oil and gas stocks, despite their strong stock run-up, have inexpensive valuations at nearly 5 to 6 times FY25 earnings. They believe that steady production growth persists for Oil India. In fact, their NRL expansion is on schedule. Apart from that, for ONGC, DWN 98.2's first oil is also expected to come through. On the dividend yield front as well, both the counters are well placed with expectations of nearly 5 to 6% dividend yield. So given all of those factors, we have MK actually maintaining a buy rating on ONGC as well as Oil India. And important to note that MK has actually gone ahead and hiked their target price on both of these counters.
All right, thanks very much for that, Pamakshi. Talking of Oil India and ONGC, Devin, for a very long time, ONGC, Oil India kind of companies, they never shared their outlook and guidance, but we saw Oil India come out after a very long time and did speak about visibility on volumes front this time. Part of that rub-off would also seen on ONGC. How are the valuations looking right now for both of them, or would you bet on any of them?
So I guess I think the important aspect about this company's business is that whenever the crude oil prices, I think softens, I think there is a little better amount of comfort vis-a-vis, I think when the crude oil prices goes up, largely because of the fact that I think they are not allowed to cap the higher amount of earnings when the prices go up. So as a result of which, I think one or the other way in which the government policy actions could possibly start bothering them, including I think the likes of windfall taxes. So to a greater extent, I think one would remain extremely wary about predicting this kind of company's business beyond a point. So the best way to look at this business is where the government intervention is high, and I think the policy measures are driven by largely the government's intervention. We prefer that I think this company should be looked at from the point of view of the volume growth that they are producing, and whether this volume growth is sufficient enough in growing the size of the balance sheet. That is where probably I think one can argue from. So largely commoditized business. As far as the current valuations are concerned, my take is that they are fairly valued. And I think the election period is now getting started from the next month, wherein probably we are likely to see the election related, I think, announcements coming in, and thereafter probably all companies would not be allowed to, I think, change their prices for some 4 or 5 months. So given that kind of a situation, I think we would stay little away from it. Though for the traders, I think this may make sense that any correction in the downside, I think probably make buy opportunity. And likewise, I think when it rallies, I think one would sell. But being investors, I think we would stay away from this commodity movement in given situations.
Point taken. In the meantime, Naresh, I want to get you in the discussion for some of these sectors which weren't doing too well but are now bouncing back. Case in point being FMCG. For the longest time, it was in a bit of a slumber. Last week, it gained and hit a record high level. And then pharma stocks too have been advancing for 2 weeks. Which are the most strongest names, if I can say that, from the pharma and the FMCG pack?
So in the FMCG pack, the first one which comes on the radar is the stock Hindustan Unilever, which has gone nowhere for the last many years. The stock made a top around this 2500 mark back in April 2020, was the first one to actually hit a new all-time high post-COVID. And since then, every time it has gone towards 2500, 2800, the stock has only gone sideways. Over the last 6 to 12 months, it has made multiple bottoms around 2450 levels. And there are multiple tops around 2600 over the last few months as well. So this is a stock which could break out and make a move towards 2750 to 2900. So that's the first name in FMCG. The second name in FMCG would be Britannia, which is getting closer to an all-time high, unlike other names in the pack wherein majority are sideways. So that's a stock which is close to a breakout. And in pharma, there are multiple choices wherein Sun Pharma continues to be in new all-time highs. Then you have a Granules India, which is trying to make a 2-3 year breakout. So out here, pharma, there are a lot of choices. So I would be watching out for Sun Pharma and a Dr. Reddy's.
There's another category of consumer stock which are doing very well last couple of months, and that is the Alco-Bev category. It is also that time of the year when general consumption, of Alco-Bev actually goes up. Look at not really Sula Vineyards, but look at how Radico is doing. Maybe United Spirits closer to 1100 now. Even the beer company, United Breweries and Soam have actually done very well in the last 6 months. And now there is a very interesting development. I'm not saying that it will boost their volumes a whole lot, Devin, but Gift City, parts of Gift City becoming much more accommodative. and allowing serving of alcohol in certain pockets. Does it come as a surprise for you?
Well, Ajay, it has not come as a surprise because I think unless you create a social infrastructure in IFSC like this city, probably you will not be able to attract and retain the talent in that particular area. That is where I think one of the condition is alcohol, I think within the social infrastructure requirement. So to a greater extent, I think that is where probably I think the move has been taken. And I believe that I think it will play out eventually. But the fact remains that I think the gift city as a place, I think for working, could possibly assume significantly high amount of traction, and that could possibly make sense that higher amount of financial activities could sooner than later be shifted into gift cities. I'm not too sure about I think how alcohol beverages I think would probably play out in this entire thing completely. But the fact remains that the financial markets I think are likely to look at gift city with much higher amount of confidence than ever before. I think that we have seen in last 10 years.
Talking about the infrastructure, yes, infrastructure for GIFT Nifty seems to be improving, and seems like that the infrastructure for the stock markets too is strengthening, because there is this consultation paper that SEBI brought talking about T+0 settlements for select trades. Let's go across to my colleague Ankur first to get a sense as to what the consultation paper is like, and then we'll of course hash it out with our guests as well.
Yes, SEBI has released a consultation paper on instantaneous settlement and also T+0 settlement, while the consultation paper has said that there is a proposal that if in the first phase in T+0 settlement trades are done by 1:30 p.m, the settlement should happen by 4:30 p.m. on the same day, that is on the first phase, and in the second phase the full implementation of T+0 by 3:30 p.m, and there is also option of instantaneous settlement. Now there are pros and cons which has been given in this consultation paper on moving towards instantaneous settlement, but all in all the regulator believes that it will be in the interest of customers, because instantaneous settlement will lead to greater flexibility for customers. Apart from that, the regulator has also mentioned about the fact that T+0 settlement will be possible by March in 2024, and those comments had been given by Madhvi Puri Bush, the chairperson of SEBI, and within a year of that implementation, instantaneous settlement might be possible.
Devin, you've been a market watcher for the longest time. Talk to us about, do you think we have the infrastructure in place for this to happen, and what do you see the impact of this to be like?
So, Anisha, in a lighter tone, I think in our country, I think we first, create the product and then the infrastructure gets built. I'm not going to be very surprised. I think this infrastructure is going to get built over a period of time. However, the most important part out here that I think this particular move is likely to work for the investors much more significantly. When you settle the trade on the same day, probably I think you bring in significant amount of market confidence, and the integrity quotient will probably increase significantly. So all from that point of view, I would think that it is going to benefit the investors the most. Whether I think we have requisite infrastructure at this point of time in place, I think it will have to be tested. In my viewpoint, the clearing corporation, the brokerages, and the banks, and all other stakeholders which are involved into this particular activity, including the depositories and the stock exchanges, will have to be tested on this particular infrastructure that one is talking about. One would like to believe, given the experience of past, that even though initially I think there might be hurdle, but given the kind of spirit at which I think this particular move has been taken, I would remain rather more optimistic than otherwise in getting the benefit out of the T+0 settlement system. Eventually, I think which will benefit all the investors.
Devin, another news which became topic of the discussion over the weekend was UPL. Now they want to do a 4,200 crore worth of rights issue. They did a buyback last year, and this comes in the middle of the environment. We all know chemical stocks are amidst all the negativity around China dumping. They've cut their guidance recently. But at a announcement of rights issue, everybody is taking it in the way that promoters will actually get to raise their shareholding at a low valuation when visibility is bad. So actually it is being seen as a positive. How do you analyze this announcement?
So there are two aspects to it. I think one is UPL overseas, second is I think UPL, the current avatar which we are having. I think largely the UPL overseas is basically banking on the UPL India for the purpose of sourcing of their APIs. And as a result of which, I think they would be possibly, I think, manufacturing or blending or formulating this particular chemical entities, I think, in respective markets of the world where they are present in different continents. So to a greater extent, I think what might happen, and this is what I think is what market is not liking, that India becomes a fixed price supplier to the UPL overseas, where the larger amount of opportunity is also there in form of market pricing. That part I think is being taken away, and that is one of the reasons for which I think the stock has been, I think, underrated, underperformed now. So to a greater extent, I think that threat remains. Now, whether this right issue is largely to free up whatever the debt components that have in the balance sheet, or whether this right issue is largely intended for higher amount of capacity expansion, I would like to believe the former is true than the later, because already significant amount of capacities have been built. In fact, I think as we talk today, in the given situation, some of the capacities have remained idle for some time for UPL, and that has been reflected into last couple of quarters results as well. So in my viewpoint, unless the money is channelized largely for the growth, I think one could not probably, I think, take a larger step in building the confidence into the portfolio. On the other side, I think if you are retiring the debt to a greater extent, I think that part would probably result into the higher amount of comfort level on the cash flow side. So the promoter will get a chance in this particular situation to raise their equity at the same time. I think, if possible, I think the unsubscribed part of the right issue, I think they may get a chance to subscribe to that particular equity. So that is one possibility that one cannot rule out.
What do you make of the ferocious move that we've seen this past year on the entire PSU basket? Do you believe that there's merit in still looking for opportunity within this space?
Avan, this is something which we have always seen in past also. Then when the other side of the market becomes expensive, the PSU would probably start catching up on the valuation side. I have always maintained that the PSU companies on the business model side, I think they remain absolutely good and convincing. I think there is no second question asked for that particular aspect. However, these companies, they lack the consistency in producing the growth. Fortunately, this government has made, I think, most of the PSU companies more accountable for the growth. And that is one of the reasons for which the market participants, the investors have started buying into some of the PSU companies, because there is a visibility of growth that one is seeing. Vis-a-vis the private sector player, I think these companies probably, I think, they require to demonstrate their amount of growth. If that is so, then I would justify the kind of rally which is right now in place as far as I think the PSUs are concerned. Otherwise, one would term it as, I think, a catch-up rally, and probably valuations at this point of time in most of the PSU companies have become reasonable. If they were yesterday, I think they were discounted or lower valued. Today, I think they are reasonably valued, as I would like to call it as. Maybe case to case, one will have to look at the companies from investment perspective.
From the power ancillary space, one stock which shot up almost a 20% circuit on Friday was transformers and rectifiers, TRIL. Pull up the chart only for Friday session, you would see the management was there on the channel on Friday, and look at how it actually darted right after the commentary. How do you look at this price action of Friday? And do you see a more upside?
Yeah, I think excellent chart for the stock in the last 3 years. I think the COVID low for the stock was around 5 rupees to a point when the stock is at 220, 225 for itself. So it's been an excellent last 2-3 years for transformers, rectifiers, TRIL. Again, what's exciting is the volumes which has been moving up higher for the stock on a consistent basis. So, even Friday's move was not a one-off move for the stock price. You look at the pattern over the last 5-6 months. Specifically, there have been many bouts or many single-day up moves for the stock price on the back of higher volumes. So that probably reinstates the fact that the stock trend is intact. We've also seen one of the patterns that whenever the volumes or the club of this volumes have been on the higher side, the stock has managed to protect the lows for itself and not broken those lows. So I think in that regards, 180, 185 could be a major support for the stock price, and we can assume that the similar pattern gets in play like what we've seen over the last 5 to 6 months. High volumes break out and the stock not breaking below the previous trailing stop loss, the uptrend continues.
There is a news flow around that as well. They have crossed some milestone in a particular category of transformers testing as well. But meanwhile, let's hear out the management. On Friday, they spoke to us and the market actually liked their guidance, forward guidance. Let's take a slice of that.
See, the total order book now will go to something like 2,000 crores. And the time frame of the order which we have received recently in last week, the timeline is about 16 months. Because these are all long projects where the customer has to plan everything and then only it will happen. So the execution time is something like 16 months. So when I'm saying 10 to 15% increase in the prices is not only because of the raw material, but it is the margins are increasing. So when the margins are increasing, last year, we had a bit of 9.5% or 9.7%. So this year is going to cross 10%, and in the coming year, it is going to be definitely more than the double figure. So it will be, say, 13 to 14%. If you say, in 2006, 2007, we had a EBIT margin of 18%. So we are hopeful that we'll be able to achieve that.
All right, let's find out then what our Chartist mid-cap trading recommendations are. By the way, that's the pre-open rate holding out mildly in the positive around the 21,380 mark for the Nifty. Naresh, take it away, your top trading call within the broader universe.
So that would be a buy on Endurance Technologies. The stock has given a cup and handle breakout above the 1750 mark. Good volumes and consolidating around that 1750, 1800 mark after the breakout. Expecting this breakout to make a quick move towards 2000 plus, stop loss at 1750.
Okay, there you have it. Endurance Tech getting a thumbs up. What about you, Kunal?
So I'll go with the buy on Laurus Labs. That's a stock which I've been recommending over the last 1 week or so from the point when the stock was at 379, 380 approximately. So I think it's moved up about that 400 mark. In fact, Friday was one of the better days for the stock price where it showed good price volume activity. So expecting the similar up move for Laurus Labs, revising the targets hard to 440 and trading the stop loss for to 400 for traders who are looking at a fresh buy at current levels.
Before we head into the break, let's take a look at the pre-open rates for the Nifty and the Sensex. It does suggest that we are likely to see a bit of a bump up to start the trading session. What's not likely to do well is the IT counters. Infosys for now is suggesting a downtick for around 3%. And let's pull up Wipro as well and see what kind of reaction are we seeing there, because Infosys is not taking lightly to the fact that the potential $1.5 billion have been taken away. Wipro has been holding up okay. Safari is the other one, which is suggesting a downtick of around 3% to begin trade. Anurag Rasayan, PNC Infrastructure and Team Lease are some of the names from the broader markets which might open with a bit of a green tick, and ditto can be said for RBL Bank as well, which is holding up with a gain of around 2.4%. But very early rates, we'll wait them for them to settle. In the meantime, we'll slip into a very short break.